What does the Nigerian Stock Exchange hold in store for us this week? All-share index declined by 1.66% last week. The best performing stock on the exchange was McNichols PLC, which gained 43% to close at 73 kobo. As far as sectors go, the consumer goods was down by 3.2% last week, while industrials was down by 2.07%. Joining us to discuss last week's performance and look ahead to this week, we have Wale Olusi, Head of Research at United Capital PLC, and Stock Market Analyst Muktar Mohammed. Gentlemen, thank you so much for joining us. Appreciate you being on. So let me throw this out there. Equity market declined by 1.66% last week. Wale, let me start with you. What do you think led to the decline? Was it profit taking or a sentiment spike that led to the market downturn last week?
Well, I think what happened last week, thank you for having me, Rotus, was interesting. The month of January, which was the beginning of, the end of the previous week, ended on a very strong note. Yesterday was up about 5%. But what we saw throughout the month, the first week of February, was a downturn. From Monday to Wednesday, it looks like there was profit taking. Discussing with our broker, as well as other big houses, it doesn't look like any of the big houses were the ones selling. So clearly, it seems like the retail investors, which seems to account for a huge proportion of this market since last year, were the ones selling. But by midweek, there was an OMO auction, a Treasury bills OMO auction by the central bank, which resulted in a spike in the stop rates. The 362-day bill closed around 10%. That's the highest in about 12 months. The previous OMO was around 5%. So that spike led to a knee-jerk reaction on Thursday and on Friday. And what the outcome of that was a week-on-week performance for the all-share index of about 1.7%. So I think those are the factors that drove the market last week, despite some interesting earnings publication last week.
All right, thank you so much for that, Wale. Muktar, let me come to you. Best performing stock on the exchange last week was McNichols PLC, I think in consumer goods. So gained 43%, closed at 73 kobo. Clearly isn't a blue chip stock, but when you see spikes like this, do you attribute it to news in the markets or a coming dividend announcement or just plain speculation?
I think you got it. It's just plain speculator in that stock. Nothing really have been in that stock. When you see the market start coming down like that, investors begin to speculate, especially those that are just coming into the stock market. So it was plain speculation that drove up that stock by the margin that it's been, because it's a stock that has not even come up with any dividend payout or any results or for a while. But sometimes stock market is driven by market perception and news. Sometimes the perception of a particular stock goes above the news. So I think that's what actually happened in that particular stock. Not really anything fantastic. No news here from that stock. In terms of volume, you realize that even the volume was not much, but there was an increase in price. I think just pure speculator.
Thank you for that. Wale, let me come back to you. We saw a big decline in consumer goods last week to the tune of 3.2%. What's the narrative for the consumer goods space on the exchange?
Well, Rotus, earlier I mentioned that in the month of January of 2021, the market was up about 5%. Some of the biggest movers of that performance were stocks in the consumer goods space. The likes of flour mills, which also published their 9-month results, fantastic results, by the way. Dangote Sugar, Nestle, Nigerian breweries. The truth is, for the consumer goods space, those in the food processing segment, they've had a fantastic year so far. On the back of the border closure, and some of the restrictions around, FX, it has helped them drive their volume because, what was coming in from smuggling was not coming in anymore. And then many of them adjusted their prices. So when the knee-jerk reaction happened on Wednesday, on Thursday and Friday, we saw a huge, pressure on flour mills, on Dangote Sugar, as well as some of the key beauty sector names. Guinness also published their number last week, I think, and it was really bad, not so impressive. Maybe I should put it that way. So I think, the gains from the previous week, as well as, that sharp pullback following the OMO auction that I spoke about earlier, were the factors that, dragged the consumer goods performance last week. But I think, as of Friday, we started seeing some interest in them again because people are expecting them to do really well. This full year result that will be coming out.
Thank you so much for that, Wale. Muktar, similar story for you, but this time with industrials. That index, industrial is down 2% last week. Well, what's the story for the industrial sector?
I think it's same of same. They've gained so much. If you look at the industrial good, you look at things like Boasmen that have moved from almost 40 naira to about 79 naira. You looked at Nestle also at a point where selling for 800, moved to as high as 1,500. You look at Dangote Cement also moved from 180 to about 255. So I think what you see there in those spaces is reshuffling of investors in those spaces are trying to reshuffle their portfolio. They are looking at that space and they are looking at in terms of yield, what will you have if you reshuffle your portfolio and move to other sectors that the price are relatively low compared to the kind of gain they have gained in those industrial good stocks. So that's what is really happening in that space. Not really special. It's just reshuffling of portfolio by investors, and investors are also profit taking to go into other stocks, especially stocks in the financial sector that are aimed to pay good dividend yield. And you mustn't forget that the people that are really moving the market at the moment are those that used to play the treasury bill space, and they are the ones that the equity market. Like he said, there was a spike in terms of rate increment in that space over the week, and so you see those reshuffling. But I think it's going to be something that's going to happen for the short time. Definitely, you will see the recovery in those sectors coming because we expect the result to be good from those industrial goods sector, especially with the infrastructural development going around the countries. So you expect that space to look good.
All right, thank you for that, Muktar. Okay, we've got a few minutes left. Wale, what do we look out for this week? Is it more of the same, or what do you think will affect stocks this week as we start the new week?
Well, I think that this week is likely to have some similarity with the last week, and my reason is simple. On Wednesday of this week, that's, I think, 10th of February 2021, there's a primary market auction for treasury bills. With the kind of spike in interest rates that we saw on the OMO auction last week, what we think will happen is a situation whereby bidders, the dealers will come out and increase their bid range, their bid rates. They will push it up so high that if the CBN had to take, any of what is in offer, if they have to allocate what they are offering, it will probably come at a slightly higher rate than the previous PMA auction. So our speculation is that, a likely knee-jerk reaction will probably follow that treasury bills auction because the yield environment is changing, and this started last December. It was, I think, first week of last December, this has started. Between then and now, the bond index has declined about 20% or thereabout because people are exiting their long positions. And when you start seeing people exit their position in the bond market like that, it also means that they are going into treasury bills, and that will also affect equities. And just like he said, a lot of people are invested in equities because they switch from treasury bills to equities. That movement back to treasury bills as yields change may depress the market once again this week. But with dividend payments and some announcements, you may continue to see some interest in stocks.
Thank you for that, Wale. Okay, Muktar, I think we'll end with you. Based on what Wale said, your outlook, about 30 seconds, do you think the market bounces back this week?
No, the market will be zigzag this week. I expect the market to be zigzag. We're going to see the ups and the downs. We're going to see profit taking. We are going to see bargains, hunters. So it depends on which space you are. I think the week is going to be zigzag. But like he said, that Wednesday, this treasury bill will give us the direction of the market for the short term. And like he rightly pointed out, once the market is being driven by two things, perception and results. So perception is working for the market now. What will sustain the market going forward is those results. And when those numbers start coming in, and if those numbers are good, you can't stop the stock market from going up.
All right, we'll leave it there. Thank you, gentlemen. Muktar Mohammed, Capital Market Analyst. Wale Olusi, Head of Research at United Capital PLC. Thank you both, gentlemen, for your outlook on the stock market.